The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. He's nice enough to come on and talk about what's happening in the world of commodities. Shawn, how you doing this morning?
Pretty good, Casey. Pretty good. Glad to have a good Easter weekend.
Yeah.
And, coming back, we're just about ready to start the growing season in the Northern Hemisphere. And so, we're ready to hit the ground running here.
Yep, it is that time of the year. We're talking about a couple weeks away from really seeing some stuff go hot and heavy. Obviously, there's plenty of reports out there, people out planting stuff already, but the real big swing and the real big kind of movement towards what spring planting is going to look like will start here a week or two, and we'll be well underway. So, exciting time to watch. We got some stuff ahead of us here that's going to bring some stuff back and forth to the marketplace. Let's start with wheat here a minute. Start looking at the hard red winter wheat ratings from last fall. Looks like they're up about 22 points from what they were this time last year. USDA is showing about 56% of the winter wheat crop is good to excellent, which is significantly better than what we saw this time last fall. So I guess, Shawn, looking at that, what are your thoughts there? And kind of what we've talked about it a lot here about some possible frost damage that we could see in May if everything kind of comes together like you've been talking about. But I guess as you're looking at the wheat market, barring any situation out there, it looks like we're headed for a fairly decent wheat crop this year.
Well, I mean, remember last year's crop conditions and the year before were horrible. So we're measuring the crop conditions against horrible crop conditions. So of course they're going to be better.
Sure.
Of course they're going to be better, and they are better. And we would expect a better crop based upon that. And so I don't think there was, the market didn't get hit yesterday from it. The market was expecting it. I mean, everyone knows the crop's in much better shape. The question is, the crop is it made in March? It's made really in, late April and May. And can we avoid any weather anomalies during that period to finish the crop through, or are we going to have some potential curveballs? And as you know, there's a possibility for an elevated risk for a frost in the heart of the casing wheat belt. And, just because there's an elevated risk doesn't mean it has to happen, but that's something to watch for, because that could take any good start to the crop, and it could just set it back and take it all off, and we're sitting back looking at a crop that's really, really poor again. And so for right now, all is well. And I expect April, as we talked about last time, to very, very good weather. Great planting pace. Expect to get, and it looks to me like the North America, listed the U.S. April weather is going to be as ideal as it could possibly to get the crop planted and to move the winter wheat crop along. And then, but I do think we could have some problems in May, and so that's right now. I think the market's going to kind of base build, sideways trade, two-sided trade. I don't really see a catalyst outside of anything geopolitically that would drive the wheat market dramatically higher lower at this point. I just think it's in a comfort zone. It's just going to wait to see how things play out with weather as we get into this critical period for determining what the crop's size and yields are actually going to be.
Yeah. Okay. All right. So I read an interesting article yesterday, I think, out of India, where they were talking about getting more control over actually knowing what they have, where they have it at, and they were talking to the buyers of grain to report weekly as to what each of them had in stock, and then compared to what the government says that there's in stock. So I guess, Shawn, as you take a look at something like that, is this some kind of a signal that you're looking at, or is this just one of those, we have a country trying to modernize its kind of processes, and we're going through some similar of growth to what we saw when the USDA was developed?
Well, I mean, really, they took the unprecedented step of essentially banning everything that they export food-wise.
Right.
And the reason they do that is because the price domestically was so high that it was what they felt they had. We did not have allowed price. They didn't think would allow prices to be as high as they are. So either they're getting the demand side wrong, which is pretty likely, meaning that they're underestimating demand in the country, right, and conversely, they're underestimating or overestimating how much supply they actually have. Meaning, by definition, if you don't have the demand side right, then your ending stocks that you think you have are smaller. So I think, it's very hard to determine demand. I mean, very, very difficult in a country that large to actually know what demand is. Much better to go and, count what you have and where it's at. And so what I think they're trying to do is, so they're, we already said numbers that don't seem to be adding up. So we want to get them more accurate so we can better plan on what we need to do, what we need to focus on. And I think this process that they're going through is a normal process that any country that goes into what I call a modernizing economy, you need better information to plan better. For the market, the private sector to plan better. Instead of, it's going to take a while. You're not just going to, change a system that's been opaque and make it transparent rather well, but they're moving in the right direction. But get some better numbers, and I think in the long run, this is going to make them be more efficient at deciding, which crops they need to focus on in a given year, which crops that they need to import in a given year, which crops can they export in a given year if they have a bumper crop, that sort of thing. So
right, okay, that makes sense. All right, so the whole avian flu and dairy cow thing has kind of reached a new level here. There were some reports out earlier this week about a human that had contracted bird flu from being in contact with a dairy cow. We saw the markets yesterday really run down based upon the idea of some fears around jumping from dairy cows to beef cows and what that might look like. So I guess, Shawn, as you look at this situation, is it starting to, kind of morph and grow into some different areas now? What are your thoughts there, and what do you see on the horizon for this cattle market?
When you don't have all the answers, this is what I call the what if phase. What if, what if, what if, what if, what if? And when you're in the what if stage, anything and all things are possible. Could there be a ban on U.S. exports of dairy? Could there be a ban on sending tainted or infected dairy cows to the beef market? Could there be a pullback by consumers who are afraid of drinking tainted? We could play this game all day long. So what happened yesterday? It was was the idea was rougher road. That shouldn't be too bad. And then reveals the went from cow to cow. Well, that's a lot more worse because now you have all these dairy cows in this close setting in the barn. And it's cow to cow. Everyone's going to get it. Yes, the other ones are the ones that are showing more severe symptoms. But of course, like COVID, you may have it, be fine, but you still have it. And it's still in the milk. And we've also found that very, very high concentrations have been found in dairy milk. Okay, pasteurization, further removal. We are not really sure if it does or doesn't. Once again, the what if. So then we had the situation with the human infection that if you're dealing with these cows, if you're dealing with this infected milk, you can get this avian flu in humans who have gotten it around the world. Not a whole lot, but it has tended to be fairly. I think in Vietnam they've had some cases. I think I read that 50% of the cases died from it. So we don't really want this to get to a lot of humans. And so the problem is if it goes from dairy cow to dairy cow, can it also go from dairy cow to beef cow? It's plausible, right? If it does do that, at least in milk, you could argue pasteurization can remove a lot of the risks. We don't pasteurize. So do people start to worry if we start getting, if someone says we found avian flu, that's the next what if. Because now you're within the whole gamut of what's of beef cattle industry. Are consumers going to pull back from that? Are exporters of, our importers of beef like Japan, they're just going to say, you know what? Until we know more, we're just going to stop buying beef from you guys. It's all plausible. Anything and all these things are plausible. We just don't have. What they need to do here, Casey, is really develop a protocol of how are we going to measure this and how we're going to continue this. Because with chickens, we just kill them off, and we start fresh, and we kill them off, and we start fresh, and we kill them off, and we start fresh. And the problem with that is that you're not building any immunity because all these new chicks are just. And so every year you have avian flu in the poultry sector every single year. The flu is a dairy cow has a much more longevity of life. If they're going to build some immunity here, and my thinking is that most likely, most of the dairy cows are going to get it, and they're going to build immunity against it. And we're not going to have this recurring problem every year that we're getting in the poultry. And then all vaccines that have been developed and have not turned out to be terribly economical for the poultry industry, meaning it's actually more economical to kill the chickens off and they produce them 3 months later, than in the dairy business and the cattle business, because of the longevity of life, it would make a lot more sense to vaccinate. So I think everybody needs to get into a room and figure out, how we want to manage this. Are we going to test every animal that wants to come to the beef market? Are we going to test an animal beforehand to make sure that if a dairy cow is found to have avian flu, what do we do about it? Do we force the dairyman to cull it off and just get rid of it? Do we just put those cows aside and say that milk we're just going to dump on the ground and we're not going to send it off because we're not really sure? that's where we're at. And yesterday we saw this violent reaction in the cattle market, literally minutes after it was found that this virus moved to humans. And so all these fears are not commemorating very high beef prices. And wouldn't take much of a concern if we got a jump from dairy cow to beef cow to have buyers of raw or beef say we're just going to hold off for a while. So that's and it's a dynamic situation, hour to hour, day to day, week to week. We're getting new information all over the place. Nebraska came out yesterday and said they're now going to limit imports of dairy cows from other states. We're starting with city. The market's beginning to build these fences, and how are we going to manage this? That we're still in the what if phase. And when you're in the what if phase, sell first later. And then, that is the appropriate strategy. If I'm a cattle producer and I have very good prices, profitable prices, why do I want to mess around with that? At the time you're in a bit of a problem, it's too late to do anything about it. The prices are going to be substantially lower. So my view is, if you're in the dairy business, protect in case it's the worst case scenario plays out and the next 6 months are ugly. You got to protect the prices you currently have, which isn't, because in dairy, let's just say, if you think about dairy, maybe it's on the flip side, we're losing tons of dairy production, tons. Huge amount of dairy. So we're going to be a thinning of the herd, a lowering of productivity, and a massive hole in supply as we move into 25. So you can make another one with that at some point. We can have sharing spike high in price, like a big move in prices to the left side as demand comes back. We get this contained, and we have no ability to turn the supply spigots on. So it's kind of looking at $10 down potential, $10 luck potential, but to put you out of business is the $10 down potential. So you got to take that risk off the table. You got to take it off the table. Blue versus DRP program, which are subsidized protection plans that the USDA supports. There's the LRP program that you can protect your counterparties. It's another government subsidized program that you can use to protect downside price risks. And shoot, with something like this, where it's a what if, as a risk manager, it's my opinion, no-brainer to utilize this LRP, DRP, subsidized programs to protect downside prices. Why we're still trying to figure out what the actual normal is going to be. If it turns out that the worst case scenario isn't going to play out and prices don't really fall much, it's not like those costs are going to but if you absorb those big declines, it could take you out. And so the job of my job and the job of any producer is to make sure you take away the tail risk of something that could take you down. And that's why I really think go out with that. And I think anyone that is not taking appropriate protection, at least out into the fall, is not thinking correctly on a straight risk management perspective. No, I don't know if prices are going to fall. And I don't know if prices are going to rise. I don't know what the next soundbite's going to be. But I know there's enough risks that I don't want to find out that we're going down.
I don't. There's a lot of stuff to think about here. This is this is kind of like, I don't want to compare it to this, but it's similar to the beginnings of the African swine fever, which was way more, that ran through the herd real fast, and it was zapping things pretty quick, but it kind of has that resemblance of that, to where this is an ever-changing dynamic issue that you got to keep your eye on. And just like you said, this is your risk management plan right now has got to be spot on as to what you're doing.
A bird in the hand right now is better than two in the bush. That's what we've said to our dairy producers over the weekend. That's how I feel. And you can disagree with me if you want, but that's how I feel. So,
okay. Right on. So let's jump over and talk about hogs, what we see happening there right now. The hog market is showing, to start out pretty good this week. We've seen some 18 cent, 29 cent jumps here, and we're seeing some good levels there. As you take a look at the situation with the cattle, do you think there's going to be some spillover into the hogs where you could see hogs get lifted up a little bit, or is that still a dynamic thing you got to pay attention to?
Yesterday I think we're up 2 or 3, right?
Yeah.
Look, if people are afraid, for all that dairy products, And let's just say this jumps to beef cattle, and we get a pullback on beef demand because people are just, they still want protein. They still need protein. They're still going to consume protein. Well, what protein? Swing it on.
Right.
And it's cheap historically. If you look at the pork price, it's not like we're setting anything on fire with the pork cutout price. So I could definitely see now, because I know red meat is not the same as pork, and I get that. But nonetheless, people still want to eat meat. They still want to eat protein. They're still going to put it on the table. And if for 3 months or 6 months, they're going to say we're going to reduce our consumption of beef and dairy, they're going to eat more pork. So there's a loser for dairy potentially demand, and for beef demand, it could be a renaissance for finding demand coming back for domestically for pork at a time that we've been having a difficult time trying to find a way to find new buyers for that supply that can't go to California anymore because they won't accept pork that's from producers that are growing pork and handling their animals in a way that California believes is not in a humane manner. And so that's a positive. And so, yeah, I think there could be more of that type of what's bad for cattle and dairy is better for pork and for hog prices. And so, I don't wish higher prices on hogs and hurting others, but if this is the way it's going to go, you as a hog producer, could be in a situation where you could get some attractive prices over the next 3 to 6 months from this dynamic, and you want to make sure you don't outlive your stakes. At some point, this is going to go away, and people are going to go back and buying dairy again. If they retrench, or they're going to buy beef again if they retrench, and they're going to buy less pork again. So, the market's going to give it, and it's going to take it. And make sure when it gives it to you, make sure you take it, because I don't think this is a long-term change. I think this is just something we're going to see happen over the next 6 months while we are figuring out.
Right. Good point. All right, let's talk about China a little bit. So China's had some reports come out where their CPI reports did show some growth, and they've seen some stabilization there, where maybe they're starting to see some reinsurgent of their economy coming back from where it's been post-COVID. Starting to see some movement there. I guess, Shawn, as you take a look at the situation in China, there could be some doors open up to where some more exports from the U.S. get shipped over there as this the steam engine starts to speed back up.
It definitely seems like not the Chinese released economic numbers, because I don't believe any of that. I'm talking about the independent numbers that have come out that we have a better handle on some degree of truth to it.
Right.
They're showing a definite bounce in the economy. We're definitely seeing manufacturing, factory orders, just belly activity. So it looks to me like we're through the worst of the for now the Armageddon scenario that we're dealing with the real estate collapse and the stock market collapse. The stock market's starting to rebound again there. And yes, that would mean that a lot of the demand side factors that many people have been putting out there might be too low. We might need to see whether it's crude oil or it's natural gas or it's corn or it's soybeans or it's bean oil or vegetable oil or cotton. We might need to kind of at some point raise those demand side expectations from them as a result of their economy beginning to improve some. Doesn't mean it's going back to the way it was. Doesn't mean it's, everything's all systems go, but it means they're starting to perform better than the Armageddon scenario. And that's a positive for commodities. If you look at the Chinese agricultural commodities that trade in China, that are based on Chinese fundamentals, hogs, corn, sugar, cotton, they all trade there. We were at 9-month highs on that index. We created that index and followed it. And so we're seeing that index rise significantly in the last 45 days to 9-month highs. So it's saying something is changing. The demand in China is gaining favor over the supply side in China. And that is another independent way of telling you things are improving. Demand is improving. And if that is the case, at some point we should see better demand for foreign supplies of all the things that they, need and love. And so that is a good long-term sign for commodities in general, especially for gray markets, which obviously are highly dependent upon,
Right on. Okay. A lot of stuff to pay attention to, Shawn. If folks want to reach out to you and get more information about what you're doing and where you're posting stuff at, what's the best way to do that?
For the page is at Feridex11, F is in Frank, ERIDEX11. We also have a LinkedIn page. You can also go to our website at Hackett, HACKETT, advisors.com. And we do, from time to time, post various interviews and pieces of information that go over our work, our cycles, our statistics, so that you can stay in tune to them and to see what.
I appreciate you being on, Shawn. We'll catch you again probably Thursday this week.
Thanks, Casey. Take care.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. You can check me out on the YouTube channel, which is the Moving Iron Podcast YouTube channel. And you can also see us on TikTok and TikTok. Check us out there. That's Moving Iron Podcast. Check out the Moving Iron LLC website. All the information for the Moving Iron Summit is slowly getting put up there. So you can register for the meeting and you can book your room. So all that stuff's up there now and you can check that out as well. So go to Successful Farming, which is agriculture.com. You can check out my work there where I've got I post a couple articles a month and I have a podcast with me and Aaron Fennell on there that we'll go through and discuss. So if you're interested in that, check that out and we will be in touch. So with that, I'm Casey Seymour with Shawn Hackett. Let's move some iron, folks. Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately? Target the right buyers and close more deals? Reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard work